All right, so we're getting a live test. It's in simulation here because this happened during a blackout that I blacked out over here on the right, unfortunately. But we shorted here, and then when we broke through here, we added. All right, so this started off with 2 contracts. Now it's at 4. All right, and that should have reset the target to plus 80 from the new break even. All right. We're also testing a new mechanism for canceling unfilled orders. It's unfortunate that I didn't get filled here, but this occurred at 7:01:52. I'm blacked out here for 3 minutes before and after the news, so I ended up missing it here in my live account. You'll notice that it's gray up here. That means live. It's attached to this dome here. It's blue here with the word sim. That's how you can tell what's live and what's real and what's sim. And so now the system automatically trails to break even. All right, and then it'll start trailing by 40 ticks and trailing to any zigzag. Whichever is closer is where you'll get taken out if the market reverses on you. The ad behavior is defined here in these blue cells, and this is the key one though, the minimum distance. What's the minimum amount that the market has to move before I'll add? And it's 30 ticks, and it will properly figure out if you're trading multiple contracts or not. This is the maximum number, so I won't add again since I told it 4 is the maximum number. And I started with 2, so then I added 2, so I'm at 4 now. So we will not do another add. If that number is bigger and another add behavior comes up, it will just keep adding. All right, if it gets another 30 ticks, so another 30 ticks worth of profit. Okay, so a total amount of profit it would be 30 ticks times, n number of contracts. Then it'll start looking for adds. Add on a break, add on a pullback, add on what's called a runaway, which is an acceleration in the market, and then a special kind of reversal pattern in the direction of the trade are the 4 behaviors we've defined for adding. So what we'd like to see here is the market to finish this pullback, and then you will see the trail automatically pull down to that pullback to the zigzag level. It won't just hang back there at 40 ticks. It'll tighten up to the zigzag. So we'll need another down bar here. That wave has to complete before that'll happen. Unfortunately, I'm not in the live account. It would be half the gain since I'm only trading 1 contract over here. We black out during the news events because it often gets very volatile during a news event. You'll see the market go crazy. So here you saw it automatically trail to the zigzag. All right, so that's working exactly as expected. Not surprising. That's been pretty thoroughly tested. And then the target is just sitting out 80 ticks off the break-even level. So if you keep adding, that target will keep moving out because you'll keep going to 80 ticks off the new break-even level every time you add. Right, we recalculate the position average, and you define that in this trade management study here. Target move. You just tell it 80 minus 80 means 80 ticks off the new break-even. And what we're doing here with the ads is, in I think Tuesday's video. Actually, you know what? I forgot to upload yesterday's video. Tuesday's video, we were talking about the level of randomness that exists in the market, and if you accept that there's randomness in the market, not everyone does, then when we're dealing with randomness. We're just minimizing losses. We're managing our risk. And when we're getting into good trades, we want to maximize those moves. So that's what this entire system that's been added here is intended to deal with the fact that I can't do much about randomness, but I can maximize cases when I'm not when I'm not affected by the randomness. Okay, so plus 6 points as we got stopped out on the pullback to the zigzag. You'll notice this is 3 ticks above that this level right here, and that's defined actually right there, zigzag trail offset. Just how many ticks above the zigzag do you want to trail to? That's there because I've noticed the market will come up and just nick it and then roll over. So I put that in to allow you to change how much of a nick you'll allow. Okay, here we are at the end of the set. At the end of the day here, my gain for the day was $10. We saw in the simulated side in live trading, or in real time, the fall from here, right, with the market doing an ad. And then we get another example of it here. This is one of those days where, clearly I've made the model for volatile times, and I needed to have made it for not volatile times. I think that's what I've learned this week. So if we look at this here, once we fell below this red line, I started making the models for regular markets, non-crazy volatile markets. But then last week I got nicked a lot, and so I thought, well, maybe I should still make it for volatile markets, and that appears to have been the wrong decision, because I look at today and what I see is there's a lot of movement here. It's not crazy, but I would normally be getting codes here for with a non-volatile model. So we'll see. We'll see if the market movement continues like this. I'll build models next week for the regular markets. I think I'm trying to set it up to build both, and then I can just switch in the morning on whichever day I want, and then also sort of run both side by side and see which one is working better. We do get in the live account a signal here. Now the codes aren't listed because I've since been doing lots of testing and other things. But so on this break here, we get a signal to get filled, and then we advance, we pull back, and then when we're breaking through again, we add. All right, and then the system moves the stop to break even, which is right there, and then the market pulls back enough to stop me out for 1 tick each, so 2 ticks of gain on 2 contracts. And the market, this is one of those cases where we didn't continue higher. We want to see this, down here. What we're looking for is, get your entry here, get your ad here, and then ride it all the way up. That's kind of what we've built here. Not getting the codes I need, I believe, because I made the model too insensitive to noise, I should say. So when the markets get really volatile, we have to tune things differently so that we don't get just chopped to pieces in the noise of all that volatility. All right. So I wasn't present when this happened, so I didn't get to see it, but I can see the actions, and I checked the activity log. Everything works exactly as I was expecting. So we'll see what tomorrow brings. I'd like to get more live testing done, and then if the other piece that we're testing, we talked about in the live trading, was the new method for canceling unfilled orders that works and solves some of the problems we have with the native functionality in SC. And so we'll test that next week, and then if all goes well, all that will release at the end of next week.